I'm Matt Bishar with REIT.com here in New York City for REITWeek 2014, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Michael Carroll, CEO of Brixmor Property Group. Michael, thanks so much for joining us.
Thank you for having me.
Now, your company underwent an aggressive portfolio pruning in recent years to really focus on your core properties. Is the overall portfolio ultimately where you want it to be, and what's going to be next in the next phase for Brixmor?
Well, the nice part about having time as a private company is we were able to craft that portfolio. So yes, we do feel very comfortable with where we are with the portfolio today. We've been very active in trying to drive growth in that portfolio, and I think very successful at it to date. And as that process continues, we'll be a normal asset manager, and you'll see us, both adding and subtracting from the portfolio, more of a capital recycling strategy.
And further highlighting the work that's been done on the company's balance sheet, Brixmor recently received your investment grade rating from Moody's. What does that mean for the company going forward, and how does that impact your ability to expand the company?
Well, ultimately we have one investment grade rating right now from Moody's. We're working with the other agencies. We would expect as we move through the year that we'll be successful there. And ultimately what it does is it allows us another tool, capital markets tool for us. So we'd like to continue our evolution towards an unsecured balance sheet, not being an unsecured borrower. And so I think this would lead us to be an issuer in that market as we move into 15.
And lastly, I'd like to talk about what built-in growth potential already exists within the portfolio. I understand a lot of the leases that are coming up for rent were at below market rate. What can investors expect there?
Well, to date, that really has been one of the key catalysts of our internal growth. We are blessed with a reservoir of below market leases throughout the portfolio from a couple of items. One, just from the structural makeup of the portfolio. It's an older, established infill portfolio. And then two, just some leases that were done on a short-term basis during the downturn. And so we've been actively harvesting those opportunities today. And we've been, last 3 quarters, we've had blended spreads 11% or better. And that's really been a great catalyst for really driving growth. And so we see that as we look forward. We're signing leases today in the $15 a square foot range, and we look at our next 3 years expiries at $11 and change and say, boy, we've got a really nice built-in opportunity that's truly organic, and it allows us to really focus on just that operating component of our business.
Great. Well, Michael, thanks for joining us.
Yeah, thanks for having me. Thanks.
For more on this and other REIT news and analysis, be sure to visit REIT.com.